Hi friends, welcome back to EduTap. In this session, we are going to discuss the previous year questions of SEBI Grade A 2022 examination. Now, in this session, we are going to discuss the MCQs related to Commerce and Accountancy Paper 2 Phase 1. So, total 10 questions were there which were asked from this portion. So, quickly, let's start our discussion with these questions. So, here we have the first question. Which of the following is not a qualitative characteristic of the accounting information? Options are accountability, consistency, verifiability, relevance, and comparability. So my dear friends, these qualitative characteristics of accounting information, they are very important for us. They basically refer to the qualities which the accounting information must possess. And in these qualities, we include consistency, verifiability, relevance, and comparability. Accountability is generally not considered in it. So that's why the correct answer to this question is going to be option number A. So my dear friends, we have to remember the four very important qualitative characteristics of accounting information. Number one is consistency. It means that we should follow consistency while preparing our financial statements so that they could be comparable. Comparability is another important characteristic. Verifiability is another, which means we should be able to verify all the accounting records. They should have proper evidence with them. And relevance means whatever information we are presenting in the financial statements, they should be relevant to the end users so that they could make better decisions. Now let's move to the next question, and this question is Ind AS 18 relates to revenue recognition relating to. Options are hire purchase, revenue arising from leases, contract, revenue arising from interest, royalty, dividend, or none of the above. So very specific question, a direct question related to Ind AS 18. So if you know what is Ind AS 18, what it relates to, you would be very easily able to answer this one. This Ind AS 18 is the basic principle, basic standard which relates to revenue recognition, and this revenue from interest, royalty, and dividend is part of it. Hire purchase, leases, and contract is not part of it. So correct answer to this question would be option number D. So my dear friends, option number D would be the correct answer for this question. So you have to remember Ind AS 18 revenue recognition. It talks about when you have to recognize the revenue in the books of accounts in relation to certain types of transactions, and it is applicable to the following transactions: revenue which arises from the sale of goods, revenue which arises from the rendering or provision of services, and the revenue which arises from interest, royalty, and dividend. So this is basically the broad scope of Ind AS 18, which you have to remember from examination perspective. Coming to the next question, which of the following is a capital expenditure? Options are overhauling cost of second-hand machinery, inauguration cost of new unit, repainting of the van, replacement cost of the spare parts, revenue from the insurance business. So we have to remember the distinction between the capital and revenue expenditure. So any expenditure which is going to increase your efficiency, increase the efficiency of the asset in the long run, that is only going to be classified as a capital expenditure. So either you are going to acquire some new asset, or if you are buying a second hand asset, you are converting it into such a condition that you will be able to use it in an efficient manner. So that's why overhauling cost of the second hand machinery that you have got is going to be classified as a capital expenditure. Similarly, the amount spent on the installation of the machinery, all of these, they become part of the capital expenditure. Inauguration cost, repainting, the normal replacement cost, and revenue from insurance business, they are not going to be classified as a capital expenditure. So correct answer to of this question is going to be option number A. So my dear friends, as discussed, this overhauling of the second-hand machinery purchased is going to increase its efficiencies. It is going to increase the useful life of the asset. So it is going to be classified as a capital expenditure, and the answer was option number A. Now coming to the next one, which of the following is correct about buyback rules? So when we talk about buyback of shares, it means that the shares which have been issued by the company, they are going to be bought back by the company now. Now, compliance with the buyback rules is very essential. If the company wishes to go with this buyback, you have to follow the company rules, you have to follow the SEBI regulations. So all these compliances have to be done. Now, we are also required to be aware about these compliances. Options are no need to file declaration of solvency, no board approval required, even if buyback is up to 10% of the paid up equity capital and free reserves of the company, can be done by issuing same kind of shares, no authorization in articles. The ratio of the aggregate of the secured and unsecured debts by the company after buyback shall not be more than twice the paid up capital and its free reserve. So my dear friends, अगर company को buyback करना है, if the company has to buy back its shares, then there is a proper set of regulations which have to be complied. Declaration of solvency is to be filed, board resolution is required in certain cases, and it has to be authorized by the articles as well. So A, B, C, D, all these provisions, they are contained in the buyback rules. This point number E, this one is going to be the correct answer, because A, B, C and D, they are not correctly written. We need the declaration of solvency, we need the board approval, we need the authorization in articles. So all of these, they are not properly written. Only point number E, this is correctly written. This is going to be the correct answer for this question. Now this is very important. This point number E, it states that ki debt equity ratio cannot exceed 2 due to buyback. So you have to make sure कि after buyback your equity should not get so low that your debt equity ratio, it rises so much, it becomes more than 2. So this is something that you have to ensure. This is also popularly referred to as the debt equity test. Okay, so correct answer to this question would be option number E. So as discussed, option number E is the correct answer. Section 68 of the Companies Act 2013, very important, you have to remember. It talks about the compliances which have to be done when the company is buying back its shares. Coming to the next one, if the due date of a bill is after the date of closing the account, then we write the interest from the date of closing as dash in the relevant side of the account current. Now this question, it is talking about a bill which was to mature in future. Its due date was in future, but we have closed the bill now. Maybe we have made the payment now. Okay, so now the interest which would have been payable in the future, now it is not required to be paid. So if we are writing the interest, this interest should be written in negative. Okay, so that's why this interest, it was traditionally written in red ink, or it basically denotes the rebate that we have got because we have closed the bill early. Okay, so this is going to be red ink interest because this kind of interest, it was traditionally written in the red ink. So as discussed, red ink interest is basically treated as a negative kind of interest. It implies that rebate is going to be allowed on the interest paid or received if the settlement of a future due transaction is done on a account current date. Future transaction को आप current date में settle कर रहे हैं, so negative interest is being denoted here. So that's why the correct answer, it was red ink, because it was a practice to write this in red ink traditionally. Now coming to the next question, which of the following is not a feature of debenture? Options are can be issued at discount and redeemed at premium. It is a part of net owned capital. Interest on debenture is charged to P&L account. All of A, B and C, or none of the above. Now debentures, shares, all of these you would find on the liability side of the balance sheet of a company. Now on this liability side, we have certain funds which are owned by the company, which is the owner's capital. It basically denotes the equity or preference. And the other one, we have the borrowed capital. Okay, the borrowed capital, the amount of loans that we have taken. And these debentures, they are also sort of a borrowing for the company. Okay, so this is not going to be a part of the net owned capital, rather it is a borrowed capital. So this is not the part of the owned capital, it is a part of the borrowed capital. So that's why option number B is not a feature, it is going to be the correct answer. Rest all points, they are true with regard to debentures. So as discussed, debenture is a part of borrowed capital. So option B was the correct answer. Coming to the next question, the rights are sold to somebody else at a price by the shareholder. What is this called? Options are repurchase of rights, restitution of rights, renunciation of rights, reversion of rights, or resale of rights. Now let's suppose I am a shareholder of a company. Let's suppose this company is Airtel, and I'm holding 100 shares in Airtel. Now Airtel gives me a right that for every 10 shares you can get one share. I am giving you this right. If you want to buy some new shares from me, you can get it. You can get one share for every 10 share. Okay, if I am having 100 shares, I can buy 10 shares from the Airtel at a concessional price at which Airtel is offering to me. Now I can either exercise this right which is being given to me by Airtel. I can pay back the amount which the Airtel is demanding from me, or and I can simply get the shares of the Airtel. But I also have this another option here, and this another option, it allows me to relinquish, to renounce my right. I can sell my right to you or maybe someone else, and I'm going to ask him for some money for selling my right to that person. Okay, so I have two options. I can either exercise the right, or I can sell the right, I can renounce the right. So this renunciation term, it is being used here in this kind of a scenario. So correct answer to this question is going to be option number C. So as discussed, option number C is going to be the correct answer for this particular question. Coming to the next question, which of the following is not exceptional item in the profit and loss account? Options are profit or loss arising on disposal of fixed asset, abnormal losses on long-term contracts, amount received in settlement of insurance claim, write-off of expenses capitalized on intangible assets other than amortization, sales of an investment in subsidiary and associated company. Now, my dear friends, you have to remember in the profit and loss account, we have some exceptional item and we also have some extraordinary item. Okay, now these exceptional items, they are related to the business, but they normally do not occur in the routine. These extraordinary items, they are unrelated to our business. Okay, so fixed assets, contracts, some insurance claim, some intangible assets written off, they are related to the business, but they do not occur regularly. Okay, but if you are selling some investment in subsidiary and associated companies, this one is not related to our core business. Okay, this is going to be an extraordinary item. So point number E is going to be an extraordinary item. Point A to D, they are going to be exceptional items in the profit and loss account. So correct answer, I believe you have already got it. It is going to be option number E. So as discussed, option E is the correct answer. You can read the explanation also here. Para 14 of the AS5, it talks about these exceptional items. So you can get this list from here. You should learn it from examination perspective. Now let's come to the next question. Which of the following is an intangible asset? So there are two types of asset. One is tangible. They are the physical assets which you can touch. And the other one is the intangible asset जिसको आप touch नहीं कर सकते. They are not physical asset. And these include the assets like patents, copyrights, etc. Options are railway siding, mining rights, leasehold land, cash, or none of the above. So out of these options, you can touch all of these except mining rights. आप rights को touch नहीं कर सकते हैं. The rights, they are going to be an intangible asset. You are going to have a right, but you cannot touch this right. Okay, you cannot physically touch the right. You can exercise this right, so it is going to be an intangible asset. So correct answer would be option number B. So as discussed, tangible and intangible assets, two kinds of assets are going to be there. So you must know the different categories of assets, how they are going to be classified into tangible and intangible. Coming to the next one, which of the following is an example of commitment item in the balance sheet? Options are arrears of dividend share, guarantee, undisclosed charges on company, dividend declare after the balance sheet date and before the AGM annual general meeting, uncalled liability on shares and other investments partly paid. Okay, now when we are preparing the balance sheet, we have to disclose the contingent liabilities and commitments. Okay, and if you take a look at the individual items which are listed in the commitment section of the balance sheet, you would find this one very peculiar item, which is the uncalled liability on shares and other investments which are partly paid. Now, what can happen in this case? Suppose I have a company, okay, and my company is holding certain shares, and this share it relates to a company A Limited, okay, and this share is worth rupees 10, and I've only paid rupee 5 on this share. Okay, so rupee 5, the difference, it is the uncalled liability, which I will have to pay in the future. Whenever A Limited is going to ask, pay me the balance amount, pay me the balance rupee 5, which is to be paid by you, I will have to honor my commitment. Okay, so this is basically classified as a commitment item in the balance sheet. So correct answer to this question would become option number E. So as discussed, option number E is going to be the correct answer for this particular question. So thank you, my dear friends. This was our today's discussion on the SEBI PYQs related to commerce and accountancy. I believe I was able to make you understand all the questions which were asked in the session. आज के लिए इतना ही. Thank you for watching. Happy learning.